Alright, welcome. Today is May 12th, 2023. I know time is flying by, but in this video I did want to go over entry points when it comes to trading. When it comes to day trading, specifically if you're going to trade stocks, if you're going to trade options. If you don't want to risk so much trading options, you can trade some shares. And if you're just learning, then you can fund your account and you can trade one share. That way you'll make a profit of pennies, but never mind the money. Think about the skill set. Think about getting in at the right point. Think about getting out at the right point. If you get out of a trade too quickly, think about where you can re-enter. Think about the trends. So anyway, right now we're looking at Tesla on the 1 minute chart on today's market. Current time is only 2:04 p.m. so the market is still active. As we can see, the price is right over here. Now let's go back over here to the beginning of the day. As we can see, we have this up here. The price breaks our range. However, it wouldn't be good to enter until maybe right around here. With that being said, the price goes up a little bit, stays in consolidation, and there's a breakout right over here going into the short side. This wouldn't be a perfect place to trade. You can be profitable, you can be a little bit profitable, you might make a little bit. I mean, it really just depends on how you're trading it, and keep in mind that the majority of the profits would be made after, I don't know, let's see what time this is, around after like 10 o'clock or somewhere around there. So anyway, market goes up, goes down, goes up again, and it hits our level right here. Now if it broke through our level over here, which it looks like it could have, then it would have been a good time to buy, but it didn't. In fact, it went towards opposite side, went over here, almost retouched, and then dropped over here. As we can see, over here would have been a good entry point, probably this bar. Here would have been the perfect entry point if you're good with opening and closing trades. Right now I'm using this charting software. However, the other charting softwares that people use, you're going to have to get used to moving your hands quickly and getting in and out of trades if you are day trading stocks or options. Or you have to set your stop losses, and remember to set your stop losses at a break-even point. So as we can see over here, the market goes down, touches our level right here. It goes up, touches this level, and then goes down again. And it touched this level once, twice, and it could have gone back up over here, and it could have been bouncing off of this level, this support and resistance level, but it didn't. It continued to go even further down. So in case you're one of those people who got into the trade over here and thought that it was going to turn around because the market went over here and you didn't want to lose money, or you wanted to keep as much as possible, then you might have exited the trade here. So if you did, that's okay, at least you made a profit, but it would have been better if you stayed in the trade. If you did, that's fine though, because another entry point would have been right around here when you see that the price breaks the low of the day. Broke it, retested it again, and then broke the low of the day again. As we can see, it does the same thing. Right now, here's the low of the day. It goes up, bounces off, and it goes up a little bit. There's a little bit of a fake out right here. It makes you think that the market's going to go up, and that right here would be a good exit point, because you want to stay profitable and you want to make as much as you can. So some people might exit here, but for those who didn't, and they stayed in the trade and they had that patience, then they would have been better off because it went back down. So if that was the case, if you exited here, another entry point would have been right around, it could have been actually to wait, just wait and see what's happening. Some people might enter over here the moment they see that it breaks this level right here, or breaks this area, goes down, retouches, goes down over here, and over here it breaks again. It breaks our lower level. It breaks the low of the day. So you can enter right here. So you can see it goes into a little bit of a drawdown, and that might make some people nervous, but taking into consideration if you're trading real money. But if you held on to it, you would have been profitable because the market went down right over here quickly. If you did get out over here on a break even, or a very small win, or a tiny loss, then you could re-enter it over here once it breaks this low. As you can see, what we're doing over here, every time the price breaks the low of the day, we can get in. Currently the low of the day is right here. The re-entry is right here. The next low of the day is right here, and re-entry is right here. Could have exited. That's the new low of the day. Re-enter. So you can see it goes up, goes down. This is the new low of the day. Here's another entry point. Over here, bounces up. Another low of the day. You could have gotten into this trade, and as you can see, it didn't really go anywhere because that was, maybe I placed that a little bit too high, but it looks like it would have gone down, but it didn't. So you could have gotten out of that trade, maybe a small little loss, but you would have made up for that in all these profits. And as you can see, it just goes up, bounces off these levels over here, touches low of the day again. Right now we're in consolidation. So the market, we're expecting it to go up or down. Right now I'm not in any positions, but I'll see. If it breaks this level, then I'll enter into a buy. If it breaks this level, I'll sell it. So that was a lot of trades throughout the day if we entered in and exited our positions very quickly. It might have been a better idea, and this takes patience and it takes practice, but if you entered in right over here and you just held the trade for the entire day, you would have been fine. That would have been one trade, and you would have been okay for the day. But it takes time to develop that patience and that comfort, because you want to make the most amount that you can make, and you don't want the market to turn around, and you don't want to close out prematurely. So whenever that happens, especially to beginner traders, you're going to have to develop that comfort. You're going to have to know that it's just money. And sometimes having other streams of money might be a good idea, not being solely dependent on trading. Just because if you are, it might make you a lot more nervous when you trade. With that being said, this is May 12th, 2023. If you have any questions, feel free to reach out.